started 22 years ago, 2 people in an office in Bermuda. We're now built out to being 13,000 across 52 countries, serving $3.5 trillion.
What did the world look like and why did you get into this specific area? What happened there?
Yeah, the world was very different. It was all about hedge fund administration and hedge funds and the growth of that. And they needed independent providers to value and report to investors.
Do your LPs talk to you about creating liquidity, about creating more DPI, and how do you see technology enabling that?
I think even startups need some sort of like a liquid secondary market. Obviously more in collaboration with the actual startup and the leadership in the startup. Early stage funds need this to get to the next stage.
A lot of people are thinking about DeFi being crypto and crypto investing. We're thinking about it about digital assets, which is actually the corporate way of doing it. It's that bridge between able to do both legs, the traditional way of servicing a large-scale private equity fund.
I hope that got you all hyped for our next topic, fund admin. This is what's happening now. I want to introduce to the stage right now. Oh, actually, no, that's not true. I'm not introducing anybody. First, I'm going to give you a short overview of why we're talking about this. You just saw a video of robots and of synthetic biology and rockets and space stations and God knows what. Of course, all of these things have to be financed. All of that money has to be somehow be administered. All of these, the entities that somehow scrounge together the initial capital to build this technology that we're all banking on today, that most of that had to get funded either through public funding, sovereign wealth, or private capital, right? And most of the private capital came through venture. Actually, in Europe, most of the venture capital also came from sovereign wealth at some point. But somehow all that money needs to flow to where it needs to go. And that's what the private markets are for, especially what venture is for. And today we're going to talk about that a little bit. We're going to talk about the sector of the private market that we're interested in, which is about an 8 trillion block of money that is spread all across the world into private funds mostly. And typically the people managing these funds, they work with a plethora of systems. They have 6, 7, 8 different service providers sometimes. They have a lawyer, they have a tax lawyer, they have a tax advisor, they have a fund tax specialist, they have a fund admin, they have somebody doing the reporting and so on. And then they have a bunch of different software systems that are relatively siloed to this day. Clicker is not working. That's the old architecture, and we think it's moving in a direction where if you're running a small asset management firm, and in the future also a larger asset management firm, most of the information that you actually want to know will be available at your fingertips. This is very hard to do if you spread information about 6, 7 different systems and service providers and glue it all together with Excel. And we can't solve that. So we can't solve that problem for the entire world. But what I said in the beginning today in the conversation with Felix and Indiana was that we realized very quickly that there was a large problem for the managers that we want to work with, and that's infrastructure. And we can't solve it yet for the entire world, but we can solve it for our customer profile, which are the types of managers that you're seeing today. So what we're doing is we're building a unified platform that has one-click migration off of existing systems, and it is radically more responsive than existing systems for small managers, especially the ones that we want to invest in. The way to do that, we found out, is we just have to build our own accounting system. We have to build a ledger. So we started with Ledger 1. We're building the whole thing from the ground up, which means that every transaction that happens in one of the funds that we administer happens on the platform. Doesn't matter whether it's a signing of a deal, it's an exit, it's a distribution. Everything has to happen on our own platform. Otherwise, we can't really automate. And why are we doing all of that? In the end, because we want people. I want to be able to answer simple questions, right? So what's the best performing company in your underlying portfolio under the funds that you've invested in? I have no clue, I don't know, right? So I have to send somebody into the reporting of all the funds that you've invested in and spend 2 days figuring that out, getting on the phone and trying to collect the data. Show me the top decile companies when it comes to revenue growth in my portfolio. Allocator 1 now has 400 something underlying companies in the funds that you've invested in. I do not know, right? I could find out, but currently today, if you ask me, I have no answer for that. Which of our LPs have the most exposure to this specific asset that has some issues, right? Across all SPVs, all funds, which of my LPs should know about something happening at one specific company. Again, I can't answer that today without expending an enormous amount of work. Basically what I'm talking about is automating all of these tasks. To do that, we need to bring everything on one platform, at least for ourselves and for most of the managers that we invest in. I'm going to skip beyond that. I'm going to keep it short because we have a panel coming up. But some of you saw the first demo, the first public demo of the product last year, and we said we're going to launch soon in the UK and Austria, I think, we were announcing. Today we're already live with customers live in the UK, in the US, in Austria, and in Germany. And then the next markets are going to be India, Singapore, and Japan. We're going to go a little bit into what that means and what that product actually does. But the outlook is, by the end of next year, we're going to be in about 15 countries. So we have feet on the ground, fully regulated or registered. We'll be able to set up pretty much any fund structure any of the GPs that we work with might need. It might be an SPV, might be an opportunity fund, might be a primary fund, might be a secondaries fund. Doesn't matter. And everything works on the same user interface. So we've made it into our the exercise that we're doing right now is fitting all of the regulatory frameworks in the markets that we're super interested in into the same user interface for a specific group of customers, which is our GPs. The next one of the next one is going to be Singapore. Very important for us. We can go into more detail on that later, maybe. And of course, in the bit farther along, 2-3 years from now, this needs to scale into all the other asset classes that we're interested in as well. And the interesting thing to me is that it's pretty much the same. So we could go into private credit today, we could go into private equity today. The legal frameworks are the same and the operations are pretty much the same. But it's just not what we're doing right now, but definitely where we want to go in the future. I'm going to skip this one for time. I just want to sum up where we are today. By the end of the year, we'll have about 30 funds live on the platform. We'll have about, once they are fully raised, we'll have a bit over $1 billion in assets under administration on the platform, and we'll be live in 7 jurisdictions by the end of this year. And that's pretty much the overview, why we're talking about this. And now I want to talk about it with these two guys. Peter Hughes. Peter founded one of the largest fund administrators in the world. He's also an investor in Allocator One. And Andreas Klinger, who many of you know, he worked at AngelList for a long time. He was a CTO at Product Hunt. He has built a lot of companies and a lot of initiatives. The last, the most two current ones are EU Inc., where he's basically forcing Europe to set up a common regime across the entire EU for building new companies, and Prototype Capital, his new fund, which he's raising right now. Peter and Andreas, please come on.
Thanks for showing the video.
You're welcome. That was actually a great idea, right? So Andreas came up to me this morning, hey, can you somehow at some point show this video, but it doesn't fit with the panel that we're doing. And then it came to me that, of course, it fits with the panel that we're doing, because all of these things somehow came to fund administrators at some point.
What actually happened is I told him, if you want me to relive my trauma with building fund admin software at AngelList, I want you to at least show this video for me.
Yes, that's what happened. So maybe, Andreas, since you're already talking, you want to give a short intro about who you are and your background?
So yeah, I have a very long, very confusing CV, founder and CTO of a few companies. And then most notably, I was CTO at Product Hunt. We sold to AngelList, where I was multiple engineering managers in multiple divisions. I think I broke more fund admin software than actually built. But yeah, I was also in the CoinList team, which did like some of the largest ICOs and a few other things. And nowadays I do early stage investing when I'm not apparently an influencer for Europe.
Peter, can you do the same for us?
Yes, thank you. Good afternoon, everyone. I'm Peter Hughes, CEO and founder of Apex Group. I started it 22 years ago, 2 people in an office in Bermuda. We're now built out to being 13,000 across 52 countries, serving $3.5 trillion. So I like you following my business model. It's looking good.
Yes, we are, of course. Maybe we can go into that a little bit. When you started out 22 years ago, what did the world look like, and why did you get into this specific area? What happened there? What made you make that jump?
Yeah, the world was very different. It was all about hedge fund administration and hedge funds and the growth of that. And they needed independent providers to value and report to investors. And then the private markets world, which obviously VC is part of, was all done in-house. So the journey really started with the hedge world. Because of the complexity of doing that, you can't really do that on Excel spreadsheets. You needed proper technology. And then you had the financial crisis and the Madoff situation. Everyone realized, well, actually, you can't be marking your own homework. So you need to outsource it to someone independent. And that was actually a really big boost for the industry. And then really the last 15 years has seen how people are thinking about the importance of independence around private markets assets, so private equity, private credit, real estate, infrastructure, VC. And that's really built into the whole ecosystem of asset servicing across all asset classes, where you're not going to get allocations really if you're still servicing your own numbers.
Can I ask a question? How much is VC now like part of your whole strategy and product?
VC is probably 5% of what we do. A lot of it is large-scale private equity. Private credit is probably capturing most attention at the moment. Mid-market private equity is really struggling to raise money, and actually probably VC is more attractive than mid-market private equity at the moment in terms of capital raise.
And can I also ask you a question? When you, I've never asked you this actually. When you first heard about us, what got you interested? Why did you get involved?
With Allocated One, it was actually really focused on not just the servicing of venture, but also the technology to do it on, with a platform, but also connecting, the LP investor side. And, I think that's the key secret these days, is not just to think about the service model, but how can you help your clients grow, be successful together, be a good partner to your clients. We're trying to do that obviously with some of our distribution angles too, for private equity and private credit and things, but certainly the technology combined with the interaction with distribution, I think.
How much is software? Sorry, I'm taking over your interview. How much is software versus services, like from your mental model? Because with this vast portfolio, like how much, where's like your split in your mind?
Yeah, obviously we started with just pure services, and now I'm thinking about actually it's really about data, technology, and then services become secondary now. So it's actually how do you display data, how do you interconnect data, to your large clients. You mentioned people have 6 or 7 providers. Well, they want one view, they want it real time. How do you create that for them with a data view? So the services are given now, and it's actually how do you add on top of a service with distribution, data, and technology. So our revenue is probably about 12% from technology. So we're really focusing on building that, and our growth should come from actually distributing our clients and helping them become bigger and getting paid to do that as well. So we're pivoting away from just being pure services in 52 countries to being tech, data, distribution, and services.
And the time frame when you built the company, how would you think geopolitically and fiscally and so on things have changed in the last couple of years? So what is it in your industry? As I understand it, there's been a lot of concentration in the last couple of years, right, which you're a major player in. And I wonder, how do you see this carrying forward into the future? So what are you doing right now to set yourself up for the next 10 years?
Yeah, I think most of the consolidations happened. We've bought 50 companies in the last 7 years, so there isn't much left for us to really consolidate in terms of product or tech or geographic reach. So now it's about actually how do you create more value and be the bridge between TradFi and DeFi. And a lot of people are thinking about DeFi being crypto and crypto investing. We're thinking about digital assets, which is actually the corporate way of doing it, and the corporate way where people will buy institutional quality funds on-chain, tokenized. People will settle funds with stable coins. So it's that bridge between able to do both legs, the traditional way of servicing a large-scale private equity fund, or servicing the DeFi way, which actually people will raise money in tokenized format, and a private equity fund or a VC fund will trade daily with daily liquidity. And that crossover is going to be really interesting to see that happen.
Andy, I want to learn more about that topic because actually that's something I don't know a lot about. You were, I think, head of engineering at CoinList?
Yeah, VP. Yeah.
VP of engineering. So when Peter is talking about the switch from TradFi, DeFi into what was your experience at CoinList like? Where do you see this heading in the future? Also, what should we be building for venture?
Yeah.
Do you have any thoughts about that?
Yeah, like if you want to know what to actually build to get big, ask him, not me. That's my first thought. We were back then actually also exploring, so like if I understood it correctly, your approach to DeFi essentially saying, let's use the infrastructure, let's use the stable coins, but actually the assets behind are still traditional. So it's still real estate, it's still funds.
It's about the rails of distribution, so be able to take these assets into wealth, retirement, retail, crypto natives, being able to put in their wallet, form a tokenized BlackRock private credit fund. It's connecting all that up, and also we're thinking about bringing through our own blockchain to be able to do that in an institutional way, because most chains are built for retail crypto investing. So we're just thinking about how do you institutionalize a whole industry.
Yeah, like with CoinList, we had like a weird moment. With CoinList, we had a weird moment in time. Like one of the main projects we actually wanted to do at that point was tokenizing startup equity to create like essentially a stock exchange. The issue, quote unquote, was this was also the same time when ICOs got really big. So we did with Filecoin, some of the large, like Filecoin and a few others, some of the largest crypto ICOs at that time. And so that became the main focus. But I genuinely believe that there's something insanely big if you get this to work.
So that means basically you were, the hype outpaced you a little bit and you didn't focus on what you actually wanted to focus on. Do I understand that correctly?
No, it's, I think it's a good problem to have if you have product lines going into insane amounts of revenue. I wouldn't say they were distracted. It was more like there was a ton of money to be done at that moment, so we focused on that primarily. Yeah.
Something that comes up in conversations with RLPs a lot is secondaries and creating liquidities in venture. And I'm interested in both of your perspectives because Andy, obviously you raised your first fund, I think 5 years ago, 6 years ago. A lot of these companies that you've invested in did very well. Do your LPs talk to you about creating liquidity, about creating more DPI, and how do you see technology enabling that?
I mean, this is like, I think we talked like 10 times about that. You need to offer some way to offer single LP secondary somehow. But it's not only like the funds, it's even in San Francisco, startups cannot hire competitively towards public companies. If you do the same cash comp as like Meta or Google, which already is like a lot, you additionally give the same amount in fairy dust, where Meta and Google give it in like stock you can instantly sell, you know? And so basically from the point of view of any reasonable senior engineer, they are offering double the comp, you know what I mean? So it's really hard, even in San Francisco, where you basically money isn't any issue anymore, it's even there hard to compete on that level. So like I think even startups need some sort of like an liquid secondary market, and obviously more in collaboration with the actual startup and the leadership in the startup. So like not behind the scenes, but like professionally planned and like at specific times and so on and so on. But I think startups need this to get to the next stage. And I also think that especially early stage funds need this to get to the next stage.
And how do you see that happening? So do you have a picture in your head of how that could happen? So is this something where basically GPs, fund administrators, founders, I think basically everybody would have to collaborate in some way to do that, right? And of course now we're out in the blue. We have never talked about this before.
I mean, there's multiple ways you can like structure SPVs in a good way for that, and so on and so on. So I think like legally it's completely doable. I think like we just didn't have yet the critical volume. Like I think it needs somebody like you or AngelList or Carter to say that they offer this as a product, you know, to have like the critical mass where it starts to make sense. So at AngelList we regularly did secondaries in larger SPVs, so like the first Uber SPVs and this kind of stuff. And that makes sense at that point, you know. But I think this is something you already need for early stage funds, in my opinion, for individual LPs at least.
Peter, is this topic of liquidity in secondaries, especially in private market funds that are very long running, like early stage venture, is this something you've spent time thinking on?
I think it's a key theme, as to how to get private markets assets into the wealth channel and democratize. If you look at BlackRock's announcements, their key focus, for the next few years is to take their private markets assets and distribute them into the RIAs and wealth channels globally. And a lot of people are building the rails to do that. And you think about stock exchanges being able to take in private markets funds with daily liquidity in either traditional form or tokenized form. They're already building that, and you've got exchanges like 21X in Germany that's a DeFi exchange where you can actually bring these products on and match them up with crypto native investors so they can put them in their wallet form. So it's already happening at scale, but it's about connecting those global rails as well, not just going exchange by exchange. So I want to be able to take a fund, tokenize it, and then distribute it into 50 exchanges at a click of a button, and actually add value to our clients that way.
And this is something you're actively working on currently?
Absolutely, yeah. So in terms of the technology, we created our own blockchain to do that, and then interconnect the different exchanges, and then be able to have, I suppose the licenses are important, so we're regulating 36 different regimes, which allows us to be a DeFi transfer agent in all those places, which takes a bit of a while to explain to regulators exactly what that is. But one by one, they're approving it, and then you can create the global distribution model.
Are you familiar with EU Inc., the initiative that Andy has started?
Not yet.
I told him seconds before.
Can you maybe also for the audience, can you give us a bit of
Has anybody
insight?
heard about EU Inc.? Okay, that's a good start.
That's not enough.
So very high level, we actually launched this pretty much last year here. It's an initiative to create a pan-European legal entity. So the easiest way to explain this to anybody in startups is think Delaware Inc., but for Europe, and ideally with the infrastructure like Stripe Atlas and YC Safes and all this kind of stuff. And the way it would work is by using something called the 28th regime, which is essentially saying there's a new centralized corporate law standard that this legal entity now falls under. You have a new registry, fully digital, that you can register these companies in. But because Europe is Europe, as a compromise, employment and taxation stays local. So because otherwise nation states would never agree to give this authority away. The idea of this is right now in Europe, the biggest problem is fragmentation. So if you are a founder and you're raising your very, very first round, less than 18% of all early stage investing is actually pan-European. Or differently put, unless you have local angels, most likely you're not going to efficiently raise. Compared to the States, where you leave the MIT and you get an investment from pretty much any other part of the country. And the idea of EO Inc. is essentially to create a standard that has scale, and through a standard and scale, you have confidence, momentum, and so on and so on. Current state of this is we managed to make it so we have, how deep should I go? Quick update?
I think it's very relevant and interesting,
okay.
So keep going.
So we made like a full legal proposal together with Oric and like multiple others. Like in detail how this works, we got like pretty much anybody in Europe who has anything to say in startups to sign it. Patrick Collison, like any unicorn founder you can name, any big investor you can name has signed this. And the European Commission has it now as their #1 item in their strategy for startups and scale-ups. Not specifically us, but like the idea of what we represent. And Merz, Macron, van der Leyen, Draghi, Letter, and multiple others publicly said they want something like this. And their goal is by end of this year or early next year to have a law that can be voted on. And ideal case would be 27, 28, have the first EU Inc.
How does that sound, Peter?
Sounds inspirational, and actually will solve a lot of problems. So I want to hear more about it later.
Basically, to me, it sounds like if we have an EU Inc. and if we have like a tokenized way of investing into EU Inc. companies, and we have an EU-wide financial market, a stock exchange, that sounds quite interesting to me. So is that something that's part of the proposal?
Yeah, so
think about how
I do this as a glorified hobby. I have absolutely no interest also to fix the rest of the system. It's way too complex.
It's very European of you.
Yeah. But I genuinely believe if you think of tech innovation as a loop, what we solve is the fast acceleration, but you need more money in the system, and you also need a way to have an IPO. So I genuinely think somebody needs to make EU IPO as a project, and just sit down with a bunch of experts, figure out how it's doable to have a pan-European IPO. Because if one of my founders would right now, for example, list in the UK, there's a non-zero chance I would sue them. So it's very much needed. And it's also easier than EU Inc. because it's like 90% of that stuff is anyway private. So the only thing likely you need to do is a virtual joint listing. So it's absolutely doable. It just has to be done.
Is this something you've spent time on?
Well, I was just going to say that I don't think IPOs will exist in 5 years' time when this all digitizes and you can actually get investors in a tokenized form. Why would you go through the expense of $10 million of legal fees to do a large IPO? So I think some of the technology that's coming through that we'll bring forward will actually change a lot of this and be able to get liquidity in different forms and different formats sooner than going through the full IPO process. So wait and see if I'm right, but it's definitely changing. And you see the London Stock Exchange has got their Pisces piece to it, which is taking private markets or private companies and giving liquidity into those companies without actually a full IPO or even any of that sort of processing and legal cost.
So basically you're saying that the whole problem is not really the problem is just jumping past the obsession with IPOs? For Europe, I mean.
Well, I think globally, I think some of these investment bankers are going to be scratching their heads in a few years and say, well, where did my job go? But I think certainly also a lot of exchanges are very protective of their market. So the London Stock Exchange won't want to collaborate with Euroclear or Clearstream or Euronext. So that's why they'll keep it separate, and it's difficult to have one European exchange. But we'll have to wait and see. But I think it's going to change quite rapidly.
That's a very interesting perspective that I was not expecting to come out of this conversation, so that's always good. Andy, do you want to give some customer feedback on your experience working with Infra1 to start? So just to make everybody aware, Andy is one of our first test pretty much customers for Infra1 in Austria.
I think I'm the first one, right? Or second one?
I think, we run several funds on it, but you're the first one that actually raises really fast, right? So
I told him that I don't want to feel like a crash test dummy, and especially I don't want to have my LPs feel like crash test dummies. So I was very, very nervous getting into this, to be honest. Also, we are long-term friends, so I know him a little bit too well, so I don't buy all the sales bullshit, you know what I mean? So I was a little bit nervous. The main reason I went with you guys is because I know worst case, you will burn down a house just to make something happen. And we had a few situations, like VC is absurd if you think about it, right? I get money from eccentric people, they give it to a very eccentric person, and I invest in very eccentric people, and all of that at as quickly as possible, and all kinds of special wishes, all the time, ideally on a Sunday, And I remember we did already the first investment, and the first investment literally started by me saying, I think I have a legal hiccup with my second fund and I cannot do this one deal right now, but I need to get it done over the weekend. And I asked him actually for legal advice for my other fund, which is running on AngelList. And he said, you know what, I think we can just over the weekend finalize everything and do the first investment through that fund, So all of a sudden I'm investing out of my new fund, which I didn't expect to do until end of summer. And that was done over the weekend like this, you know what I mean? And that was a big one. Another one for me was also I had a few things where I'm this and this we need in the software changed. And I was expecting, thank you for the feedback, we will communicate it. And it was more okay, cool, let me get back to you. And same day they had the change in the software done. And this kind of rapid speed is, I think, it feels like founder speed. It feels like founder energy, which you usually don't have with bigger platform providers. No offense. I have never.
Thank you very much, Andy. Thank you for listening to 30 minutes about fund administration. I really appreciate it. Peter and Andreas, thank you very much. I appreciate it. Thank you.